Hey everyone, welcome back to Corporate Decoder, the place where we sift through mind-numbing corporate filings so you don't have to. Today we're diving into the ECD Automotive Design's annual report, and trust me, this one has more twists than a mountain road. You might even call it a Resto-Mod job, if you know what I mean, because it involves some redos, if you know what I mean. Here's the gist. ECD, which restores and customizes luxury cars, is facing some challenges, including a recent change of CFO and some regulatory speed bumps with the Nasdaq Stock Exchange, and a few not so pretty financials. Ready to decode? So this document is their annual report, basically ECD, Automotive Design's yearly homework assignment for the SEC. Inside, we're going to find out how they made money, what their struggles were, and what they're planning for the future. This report is like their company yearbook and grade card rolled into one. For the year 2024, ECD made about $25 million. That sounds like a lot, but they actually lost about $10.8 million. This is quite a bit worse than 2023 when they only lost $122 million. You might be thinking, how do you lose money making cars? And that's exactly what we're here to find out. First, the automotive industry is tough. ECD faces big-name luxury brands such as Porsche and Ferrari, and smaller custom shops that also restore cars. While they think their customer service and customization options set them apart, those bigger brands have way more cash. ECD estimates that they produced over a quarter of the Land Rover Defender restorations in the US in 2024. ECD has big plans. They want to boost revenue and profits. They hope to sell more vehicles and charge more for them. This is very common. They want to grow their business. They also want to keep a larger inventory. This could allow them to negotiate better prices with their suppliers. The company is also planning retail locations in Florida and Massachusetts. In March 2023, ECD signed a deal with Ampere EV to be their exclusive electric vehicle kit builder in the United States. A very important detail. This gives them a unique selling point. They're betting on electric vehicles being the future. Since they are rebuilding classic vehicles, they have to import vehicles over 25 years old due to regulations, making things a bit complicated and expensive. ECD has to make sure the rebuilt vehicles still comply with US emissions standards. Government rules are always a risk for car companies and a big expense. This is a bit of a bumpy ride because the company received warnings from Nasdaq about not meeting certain requirements. They didn't have a high enough market value and were late filing financial reports. While they got an extension, this is something to keep an eye on. If the stock price stays low, they could get kicked off the exchange, which is never a good look. Back in April 2024, ECD bought Brand New Muscle Car, a trademark and some assets related to building classic muscle cars for potentially up to $125 million paid in stock. They're hoping to expand their customer base. In June 2024, ECD partnered with Black Dog Traders and Austin Peterson to produce customized Toyota FJ SUVs. ECD is paying Austin Peterson $15,000 a month for consulting. This is in line with what the company thinks is important, but it could also add up. They also signed a deal with Blackbridge Motors to produce classic Land Rover Defender SUVs, paying a percentage of the sale for each referred client. So ECD is essentially paying commissions to bring in more business. People leaving and joining a company can make things unstable. Raymond Cole resigned as Chief Financial Officer and Benjamin Piggott stepped in. A new Chief Revenue Officer, Kevin Kastner, was also hired. A lot of leadership change can mean the company is struggling to implement its strategy. That same filing acknowledges defaults with Defender SPV LLC and reports an additional financing of $1,154,681,000 along with issuing shares of common stock and warrants. ECD entered into a floor loan agreement with First National Bank of Pasco, granting a security interest in used vehicles for a revolving line of credit up to $1.5 million. ECD's offerings include custom Defender D90, D100 and 130 Range Rover Classic RRC, Series IIA and 3rd Jaguar E-Type, Roadster and Coupe, as well as beach runner vehicles. This is boilerplate but super important. The firm's financials may need adjusting as a result of previous errors. It indicates the company is working to correct prior accounting inaccuracies. The classic car market is estimated to be worth $2 and in Chedjed up to $70 M80 Andy Chen get up to 75%, 40%. The SEC requires companies to outline risks to their business, and this is perhaps the juiciest part of a filing. ECD admits that they might not be able to forecast things accurately since they haven't been doing this for very long. So you should take everything with a grain of salt. There is a risk of product dissatisfaction from highly customized products and also depend on a continuing demand for high-end luxury customer passenger vehicles. ECD might need to borrow more money. If they do, they may have to give lenders some control. If they sell more stock, existing shareholders will own a smaller piece of the pie. The company may not be able to issue debt or equity on terms acceptable to us. The luxury market where ECD operates goes up and down depending on the economy. An increase in interest rates may increase the company's cost of capital. This is a big one. It is admitting that their internal controls for financial reporting aren't great. Essentially, there's a higher risk of errors or fraud in their financial reports, which may affect financial results, but also investor confidence. All right, let's dive into the numbers. This is where we see how the company is actually doing and not just what they're telling us. Accounts receivable are down from $17 in 2023 to $12.09 in 2024. This means that the company is not able to collect revenue as easily. The company recorded 1.2 M of goodwill. Goodwill typically represents the value of a company's brand name, customer relationships, intellectual property, and any patents. It seems like this goodwill is mostly from the acquisition of brand new muscle car. Total liabilities are about $37 million, which is a problem since they only have about $1.4 million in assets. As mentioned before, ECD suffered a net loss of 10.7 M versus 1.1 M a year prior. For the year 2024, the company used about $9.7 million vis the prior year using 1.19 while generating revenue. This explains the point above, meaning that the company is having problems converting inventory into cash. Lastly, it should be noted the ECD adopted an insider trading policies and procedures in May 2024 dorsal. Alright, so what's the verdict? ECD Automotive Design is in a tough spot. Here's the tea. Right now this company does not look good, but it does have a chance to improve, with big focus being its brand that is known to be a high quality product. I'm personally not sure that the market is large enough to make this a successful investment, but I could see them become profitable over time. Send the leadership changes, potential Nasdaq delisting, and the fact they had to restate earlier financials make this a high-risk investment right now. They need to stabilize their finances, improve internal controls, and prove that they can manage being a public company. I personally would consider it an overly speculative business, but maybe you are into it. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, don't forget to smash that like button, drop a comment with your thoughts, and subscribe for more deep dives into the world of corporate filings. Until next time, stay informed and invest wisely.